Schultz with New American Funding. Hi, Ryan. I know you do several different loan programs, but one of them that I did want to touch on is the NAF cash. Can you explain or share with us how that program
Yeah.
works?
Yeah. So this is another exciting program, and it can be used in conjunction with VA. So this is for VA buyers as well. We have a program specific for New American Funding. We call it NAF Cash, which is just the New American Funding abbreviated. It's specifically designed for people that need to get their offer accepted on a property. And let's say they're having a hard time getting their offer accepted. When the offer is written, it can be written as an all cash offer, close in 10 days, no contingency. So the buyer can put a super strong offer on the property. Sometimes it's harder to get the offer accepted because it doesn't look like they have this large down payment like somebody else, right? Or we use it a lot for people that are contingent buyers. So if you're a buyer that's buying a new primary residence, but you have to sell a primary residence first, way to get your offer accepted is presenting a contingent offer. So you can go in with our all cash program, and basically you pick the property, you pick kind of the terms, and then when you submit the offer, New American Funding will be the buyer. We buy that property all cash. We use our own funds for the earnest money deposit, the closing costs. We purchase the property, get it off the market. And then what we do is we write a purchase contract where we're the seller and the buyers are the buyer on that contract, and we open up a second escrow. So the buyers can see they are the end result buyer of that property. So the idea behind the cash is help someone get their offer accepted so they're not a contingent buyer and they lose the property they want. Or again, if they're a VA buyer and they're putting zero down and they keep getting their offers overlooked, this is a way to get them in as a top buyer.
Most or some people understand this loan as the bridge loan as well. And they
Well,
were
there's
very
two.
popular. Oh, there's
Yeah,
it's
you
two different
can.
ones.
Yeah, there's two different things here. We have a bridge loan as well, but it basically replaces a bridge loan because if someone is contingent and they're selling a house and they need to buy a new house, a lot of times they don't have that money yet for their down payment, right? Because they're waiting for that house to sell. So what they could either do is take a bridge loan, which means they're going to pull money out of the house that they're selling and use that for the down payment on the new house, or they could use this cash program where we purchase the property first. How we do this is the client would pick the property that they want to put an offer on. They decide what price they want to offer. And when you guys write the offer, the contract will have New American Funding as the buyer instead of the actual buyers. So we
Okay.
will use our proof of funds. We will come in and hopefully get the offer accepted as all cash. So now that property's off the market, we are in escrow to buy that property. And then we write a purchase contract where we're the seller and the buyers are the buyer from us. Okay. So we open up a second escrow so they can see they are the end result buyer of that property.
Gotcha.
So what it allows us to do is now purchase that property. If they are a contingent buyer, once we close on the cash transaction, we let them move into the property so they can have two properties for a little while. They can move all their furniture, move everything back and forth so they can get themselves situated into the new house. While the other property is being listed for sale, they're living in the new house. And then once they sell their home, that's when they will come in with the money from the sale to do the down payment, pay the closing costs, and then we put the property back into their name. So it's pretty handy. It's super handy if they're contingent.
If they're
It
fighting
also
with
works
other
for
offers.
Yeah, exactly. It also works for VA buyers, conventional buyers, jumbo buyers, but we use it, most often for that contingent buyer or even somebody that's a first-time buyer putting very little down and they're having a hard time competing with their offers. They could use the cash program to purchase the property and then buy it right back off of us after.
Now, do they buy it right at the same price back from you?
There's a
From
little bit of a
New
fee to
American?
this. Yeah.
Okay.
So let me explain like the costs involved. So when we do buy that property, we are going to be the buyer. So we pay all the closing costs on that property. When we end up selling that property back to the end buyers, we're now the seller, so we pay seller closing costs. They came up with a fee, it's called the convenience fee. So if the home was a $600,000 home that we purchased all cash, we're going to raise that price by 2% and sell it back to them for $612,000. So there is a fee that's attached basically, or the price of the home goes up. They don't have to come out of pocket with extra money, but there is a marked up price a little bit to the house.
I mean, it makes sense to me that 2% is what you were going to probably overbid anyways, probably a
Right.
lot more if you were
Exactly.
financing and trying to win over that offer.
How long does a seller have to sell that property?
So once we close on the cash transaction, they can move into the new property, and we want them to sell their existing home, hopefully within 60 days. That's kind of the timeline on the way that we've written it up, but they will do extensions. So we've had it go much longer than that. We do not want to own that property. This is really just a service to help them get the property. So we will do extensions as needed. Now, once we close on the cash transaction, the buyer basically becomes a renter from New American Funding. So they're living in the new house, and we are keeping track of a daily rental amount. And it does not have to be paid at the same time that they're selling their house, right? But we are keeping track of the number of days until they officially close and buy it back off of us. So let's
Okay.
just say the rental amount is $150 per day. The rental amount varies depending on the cash price of the home, but we use like 150 here. So let's say they moved into the new property, they have theirs listed for sale. Theirs sells, it takes 45 days. Once they sell their house, that's when they'll have their money to come in and close on the transaction with us. Okay. So at that point, they would bring the money from the sale that would be used for their down payment, pay their closing costs, and then they would get a rental invoice for the number of days that it took, basically, that they lived there until they bought it back from us. So
That makes sense.
if it was $150 a day and it took 45 days, they'd have a rental bill for $6,750.
Okay.
Did
So
you say this program also works for a buyer that doesn't have a property to sell?
yeah, this does not have to be for a contingent buyer. This could be first-time home buyer, for a conventional buyer, VA buyer, jumbo buyer, and even like non-QM, like self-employed bank statement programs. So it can be used for any of those situations. The ones we see it most used for, though, are like the contingent buyer, the VA buyer, or the first-time home buyer who's, out there placing offers on a house, and let's say they just don't have a large down payment. So when they're placing their offers, it doesn't look as strong maybe as other people that are putting 10%, 20, 30% down. They're having a hard time getting their offer accepted. Then they can use the cash program and come in and, now they're the top buyer usually on the property because they're coming in as all cash with like no contingencies.
Is there a purchase price limit?
There's a purchase price limit for this, for the NAF cash program, and it's set at $2 million. So we're looking for properties that are 2 million or less. But again, we're not turning away anything. So if the property is above 2 million, we just have to look at it and see if we will make an exception.
If I saw my dream home and that cash offer was going to help me win the offer, I would totally go for something like this.
Yes.
Yeah, it's a great program, and there are those two fees, but just like you said, like a lot of times that marked up percentage of the purchase price, if it's a popular property, you're going to be maybe in a, if you're going in with a financed offer, you might be in a bidding war, you might go over that price, right? So
Yeah, I mean, I
if
just
you
had
just know, right, I know I'd rather take my best foot forward and go in all cash, and I know this would be the final price.
yeah.
And sometimes you can get the house for less. Like I have two that closed last month, and one got the price. It was a $2.5 million home. So we did make an exception for the NAF cash. And then they were able to get the property for 2.35. So they got $150,000 less on the house because they went cash. So then when you add that, 2% markup, they were still way ahead. And the other one was another large one. I think it was like 1.75, but they got it for $75,000 less.
Wow.
So both of them super excited. They were able to get the property. They didn't have to sell their home first. They got the home for less. And it makes it pretty convenient because you're able to have two homes for a little while there. So you can paint the new house, carpet it or whatever, live in your old house. Once you're ready, you move all your stuff into your new house. You can get your existing house vacant, staged. That
Yeah.
obviously helps it sell faster for more. So
Less stress. Mm-hmm.
yeah, exactly.
That's awesome. What type of client or do you see taking advantage of this program?
Yeah, the most popular is the contingent buyer. Another good thing is people that are moving out of state. So we do loans in all states. So I've done quite a few where people wanted to move to Nashville, Idaho. They need to sell a house here in California, and so they're confused on how to do it, right? Do I sell, then move to Nashville, but now I'm renting and I put my stuff in storage. I don't know where I'm going to live. Well, I mean, it's perfect. They can go to Nashville, find the house they want to buy, use the NAF cash to purchase that property. Now they've already got their property out of state where they're going to move. So then it's easy just to move everything from California to the new house and then sell that one. They're already living in the new state. So it works good for that too.
Are you the only ones that offer this cash
Yeah.
program?
Well, yeah, this one, ours is called
Here in
NAF
our
Cash.
area. Okay.
It's the only program that works this way. There's another program that's similar, but it's the way that they work, it's different. But yeah, we're really the only company that offers this.
That's
Yeah, and I'm
great.
glad that you clarified the difference between this program and the bridge, because I thought they were the same. But the bridge is just them taking out their equity, buying a home with a bigger down payment. I'm sure you guys will also look out if the house is marketed correctly, priced right. You keep track of that, right?
Before we pre-approve them for this program, we ask you to send us a CMA and a net sheet for the house that they're going to sell. So we want to make sure, is this a realistic price? How much do they owe? Like how much, you know what I mean? How much are they going to make from the sale? So we can determine on our side, like how risky is it, right? Are they going to
Right.
make 100,000, but they need 100,000 exactly to buy the new house? Well, then that might be too risky, because what if they have to drop the price and now there's not enough money? So yeah, we're looking just to make sure that the sales price looks accurate. We see kind of what they're going to net, and then we can figure out how much they're pre-approved for on the other side.
And that homeowner has to have enough equity.
They do. We usually we usually require or want them to have 30% equity in the house that they're going to sell. And again, that buffer zone is usually like what I just said. We want to make sure there's enough money. If they got that property on the market and it's not selling and you have to drop the price a few times, we need to make sure they're still going to make enough no matter what to qualify for the new purchase.
They have the room.
But
okay.
it's too. There are exceptions to that, again, because let's say they don't have 30% equity in their house, but they're so well qualified on the income side and stuff that they don't even need to put down. Let's say they qualify with 5% down on the new house. Then we just need to make sure there's enough room, right? We don't need they don't need 500,000 here if they only have to put down 20,000 here, you know?
Yeah.
Okay. And then interest rates is basically whatever the loan is approved for. So there's no changes there.
No, when they get the loan from us at the end, they're going to get whatever type of loan that they qualified for, whether it's conventional VA. They get a standard loan, standard interest rate, no marked up charges or anything there.
Okay. That's awesome. Is there anything else that you want to share about NAF Cash?
Again, like I said, it works in all states. It's again, it's a nice niche program, and it's a great program actually for any time you're getting a buyer pre-approved. Like when I'm doing pre-approvals for a new client, whether they're a first-time home buyer or contingent, I usually look to see if they qualify for the NAF Cash and get them approved for both options. So, you know, let's say you have somebody and we pre-approve them and send you as the agent a conventional pre-approval letter with 5% down. We could say, great news, they're pre-approved for a conventional loan, 5% down at $800,000. And then we could also give you a NAF Cash approval saying, also, they're approved at $800,000 all cash. And so for your buyer and for you, as you're out shopping at properties, they would have two options, right? So if they see a property that they love and they say, we, place the offer as a regular conventional offer, 5% down, they could try that. If there's a lot of competition, or if they feel like, I don't want to risk losing this house, you would always have the cash option where you could say, this one's going to get like 10 offers. Like, do you love this house? Do you not want to lose it? Like, let's go in as all cash,
Now you have more leverage.
Right. So both times you have two options kind of for the clients.
That's great. That's really plan B, having plan B ready to go.
Exactly.
Yeah.
Well, thank you, Ryan, for being with us on this episode.
And how can people contact you?
I'm in New American Funding, downtown Glendora. So you can find me on newamericanfunding.com. You would be able to look up Ryan Schultz, or it's nafhomes.com/Ryan Schultz, or on Instagram, it's schultzlendingteam.com. And I think those are probably the best ways to reach me.
Okay, great. And I will also share that contact in our show notes. Ryan, really appreciate your time. And thank you so much for being with us today.
No problem, guys. All right. Thanks a lot.
Thanks for listening. Let's talk SoCal real estate.
If this episode helped you, be sure to subscribe, follow, and share it. And tune in for new episodes wherever you listen to podcasts.
And if you're thinking of buying or selling in Southern California,
click the link in the show notes for your free buyer's guide. And if you have any questions, email us. We'd love to answer them all.
Isabel Machrone and Rosa Ortiz are licensed real estate agents with Keller Williams College Park. Each Keller Williams office is independently owned and operated.
The information shared in this podcast is for informational and entertainment purposes only and reflects our personal opinions and experiences. It should not be considered legal or financial advice.
We make no guarantees regarding accuracy, timelines, or results. We always recommend consulting with licensed professionals and doing your own research before making any real estate decisions.